Hello and welcome to our first market update for this year. My name is Wehrle and I'm the Head Investment Solutions at BlueOrchard. Looking back to the first quarter, we saw various events had an impact on the markets. In the US, the Democratic administration and Democrat-led Congress completed a historic stimulus package, which led to higher growth expectations, the potential of rising inflation, as well as sharp rise in interest rates. In emerging markets, the rolling out of vaccination programs has started, with some countries such as Chile being on the forefront globally. Other countries may face more difficulties, which could delay their recovery. Our teams in the regions follow the situation closely, and my colleague Gustavo will share some insights from Ecuador later. The military coup in Myanmar has led to increased uncertainty for investments in the country, and we are monitoring the situation closely. On another more positive note, we expect India's new budget proposal to support the recovery of the economy. With respect to our private debt portfolios, they have continued to show resilience as our investees manage the situation, and we see ongoing benefit of our robust credit and country risk assessment platforms. On the listed bond side, rising interest rates have been challenging, but the high quality of our holdings and our strategy to partially hedge interest rate duration were helpful in balancing out that impact from a performance standpoint. In terms of outlook, we expect continued fiscal and monetary stimulus to support the markets, however to a lesser extent in emerging markets. We anticipate that central banks will allow for certain levels of inflation until they feel comfortable with the resilience of the recovery. Generally, we remain confident that our funds are well equipped to manage the current market environment and that we are able to continue identifying attractive investment opportunities. Gustavo Muchotrigo, our investment officer in Lima, will now share his insights from one of our investees on the ground. Gustavo, over to you.
Thank you, Michael. Similar to what has been observed in most countries around the globe, the COVID-19 pandemic hit the economies of Latin America countries, some of which were already struggling with weak fiscal positions prior to the outbreak. They saw their GDP contract in 2020, with Panama and Peru taking the biggest hits. For 2021, there is a recovery expected, with GDP increasing in most Latin America countries. Much has been written and said about state-level responses to COVID-19. Today, I would like to draw attention to how financial institutions responded to the pandemic. In particular, I would like to share the experience of one of our Ecuadorian investees, Banco Solidario, one of the strongest institutions in the microfinance market in Ecuador, and that has been a partnered institution of BlueOrchard funds for nearly 20 years. Banco Solidario's response focused on three key elements: staff protection measures, impact on borrowers, and the use of technology. With regards to staff protection measures, Banco Solidario gave high priority to protecting its employees through reduction of hours, split team arrangements, and restrictions on field work for loan officers. To understand the impact of COVID on borrowers, the bank conducted fund surveys to assess the health of both their clients and their businesses. They worked to understand the local impacts of COVID in particularly hard-hit areas and, alongside the Ecuadorian regulator, implemented new repayment structures and timelines to allow businesses to recover while keeping current in their obligations. Finally, the use of technology. An area where Solidario has invested significantly was a critical aspect of how the bank connected with its borrowers and maintained a handle on the overall state of its lending portfolio during the peak crisis period. They even developed a chatbot specifically in response of the pandemic to help borrowers solve general inquiries. Through a combination of thoughtful measures by the bank and the strength and resilience of its borrowers, Banco Solidario has managed to continue operating, gradually returning to growth, and has seen a steady improvement in the quality and quantity of its loan portfolio impacted by COVID-19.
Thank you, Gustavo, for your insights, and thanks for watching.